Ingrid, it's going to be a great session for the Australian share market, and of course it follows another fantastic session over in the US. The banks very much in focus. It was not only about those inflation numbers, with inflation speeding up over in the US, but also we saw retail sales numbers impressing, and that's a real X factor for the markets at the moment, what we are going to see in terms of bond yields. Last week the 10-year treasuries hit above 2.5%, and that was a big moment for the markets. And of course, then in addition, we've got all those bank earnings coming through as well. JP Morgan came out on Friday. And look, those tax cuts very much in focus, because one of the things that JP Morgan highlighted was that its effective tax rate should be around about 19% for it this year. That's extremely low. So I guess here in Australia, we'll be watching the banks as well. Commonwealth Bank still trading at a discount, but I guess it's Macquarie, which really has exposure to that global growth story, as well as what's happening in the US. But of course, with the US on holidays today, it's going to be a pretty subdued start in terms of volumes. I mean, there's so much happening in the banking space at the moment. On a higher level, we're still watching what's happening in terms of US rates. And I guess the guessing game is on where we're going to see an inflection point for rates in other economies. So we've already got the US as well as Japan really concentrating on its balance sheet. And I guess the market just focusing in on what might be next. And there's big implications in terms of currency there. But I guess domestically, the big four banks are all focused in on the Australian economy. We've seen the last few years divestments out of Asia as well as the UK, which means all four of them are looking pretty similar at the moment. So when you're targeting the banks, for me, a lot of it is around valuations at the moment, because in terms of models, yes, some have more exposure to the retail space, such as Commonwealth Bank and Westpac, and others have more exposure to the banking space. But they're all have similar risks in terms of the Australian economy. And as you mentioned, Ingrid, growth rolling over in the residential housing space here is a key one, and we know that that bank share prices are very tightly tied to the bad debt cycle, and that's been pretty benign for a number of years now. But I guess also just looking internationally, we are seeing a bit of a shake up on the digital front as well. The Australian banks have less of an incentive, I think, because it's an the big four banks have such a dominant position here. So I think we're going to be a little bit behind the curve when it comes to some of the technological advancements which we are seeing around the globe. And that may come back to bite the big four banks, which are so dominant in terms of market share, but I guess it's just a little bit slower in terms of digital transformation.